JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 29th of November 2022. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channels, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us, guys. So now then, let's jump into the charts. So the first one I actually want to pick up here is Nikkei 225, well, as always. But yep, we have managed to drift nicely to this lower side of this potential rising wedge pattern, which yeah, according to all the TA rules, tends to break to the downside. However, as I said to you before, let's wait for that drop below the 27,900 zone, somewhere below that, in order to go lower. At this point, I would say let's wait. We're close here, and let's see if this theory of mine will work out or not. Because again, we are near this key support zone. I mean, I cannot like kind of say it in any other way as just that we are still, you know, near this area. There could be a potential breakout. However, this is where I need to kind of specify and mention that if somehow the index continues to trade within the or above the lower side of this rising wedge pattern, then there is still hope for the bulls. The bulls could still kick in here, and I think more bulls could jump in again if we do push back above the 28,282 territory right here, and then yep, we could see a further move north here. But if we start breaking this area, guys, this is where, like I said, the idea of a rising wedge could work out. Now, Shanghai Composite, beautiful push to the upside here. I mean, of course, there's some news, some positive news. It seems like they're coming out from China, so that somehow they're coping with their whole kind of situation with COVID. Again, of course, there's a lot of uncertainty. What's happening? Where and how is it, which source to trust and stuff like that. So that's why I would say don't purely rely on just in general in any news. Yeah, the headlines can drive the market and can give that little spur, like this little jump, or or that maybe drop. However, it's all kind of sometimes subjective. So I think that the only thing that you can trust nowadays, I think it's yeah, it's just kind of what you see, what you think, and how you interpret it, and how you how you kind of believe in it. So unfortunately, guys, I mean, yes, that's the modern day world that we're living in. So yeah, at the moment, what I'm seeing here, for example, on this chart, hey, I'm seeing a break of this downside line, and I'm finally seeing this push towards that 3,145 level. Well, this is where we're currently getting a hold up. The index is still trading, so we still have around 50 something minutes left of trading, so be careful with that. But in general, everything's looking quite positive, I would say, and this could end up pushing towards my target, the 200-day EMA, but let's wait and see. Let's not rush into anything. ASX 200, guys, so this one's also rebounding due to positive news from China, but yeah, I would say Be careful again. Look, I mean, we're having a nice reversal here. Yes, great, wonderful. Can we see a push above? Well, first of all, actually, we had a nice reversal from this hurdle here, the 7,177. I talked about this barrier, and previously I looked at it as a good area of resistance. Now it's acting as a good area of support from which we rebounded, and now I am aiming for this 7,262. Well, we're not far from that level, but I think that I need to see a push above this barrier in order to go further north. I mean, at this point, I'm just observing the price action, not doing anything with the downside. Let me just adjust a few arrows here. With the downside, basically a break of this upside line is required, and at the same time, a drop below the 21-day EMA could do the trick for a few more settlers. Now, NASDAQ 100, guys. NASDAQ drifted yesterday to the downside. It was the, let me just double check, I think it's the second, from the top three, NASDAQ was the, let me just say, yeah, it's actually, the NASDAQ 100, because this is what I'm looking at here is the NASDAQ 100. We also have the NASDAQ Composite, so from the top four, if we can, include that. So the NASDAQ Composite, of course, in general, was the biggest loser. However, the NASDAQ 100 was not the biggest loser, and they only dropped 1.43, whereas the Dow, for example, dropped 1.45, and the S&P was 1.54. So I'll get to the S&P in a bit, but looking at this picture here, I would say, okay, we did get that little correction here to the downside, but can we get a further one? Well, this idea could be valid if we, for example, drop and stay below this 11,519 territory. I talked about this level. Let me just get rid of this downside line, no longer needed. So yeah, if it falls below this area, then I would say that could attract more sellers into the game, and we could end up moving towards that 11,177 territory right there. In terms of the cash index right now, and where it's sitting at, the index is sitting at around, let me just double check very quickly, 11,656. So basically, we are near this barrier. However, I think it's time to get rid of this barrier. It's not really valid anymore, and to be honest, I think the more valid barrier is that one, and from here I will have my upside scenario, because this 11,866, because look, at the same time we could break through this 100-day EMA, and potentially more buyers could join in. In terms of the downside, I would say if you're looking for some lower levels, then a drop below the 11,519 territory is required still. Until then, I am just gonna observe the price action. And if basically, long story short, if we remain between these two EMAs, the 21-day and the 100-day EMA, then yep, I will stay a little bit on the neutral side. The S&P 500, so there we go. This 4,028 territory continued to provide resistance. Look at this, how well it played out. Don't get me wrong, we're still within the rising channel pattern, so that's still good here, but I would say if you're looking for some lower levels, guys, then a break of the lower side of the rising channel here is needed. At the same time, we would fall below all of the EMAs, and we would fall below the 3,912 territory right there, which is quite an important level. As you can see here, it acted as a good area of resistance and then support. So yeah, if we do fall below this area, I will consider a move lower. Another thing to complicate your lives in general here, because look, although I think that we are in this nice rising channel, at the same time I think that we are also stuck in something like this here. And you probably already can see what I'm going to do, and there we go, guys. So this potential idea of a range, this is where we're currently sitting at, so that's why, for example, a break below this hurdle is quite important, because it would also lead to a break of this range where we're currently trading in, since from around like in the 11th of November, something like that. Excuse me, guys. So, long story short, that's the situation with the S&P. Again, I would say that these are my targets. These are my levels for breakout, but until then, if we continue to trade somewhere here, I'm not touching that. The German index, DAX, so this one had a beautiful correction here to the downside. That's actually great because look, it had a good run, I would say. Yep, it's a quite significant run. We have fallen below that 14,440 territory. I spoke about that level before. But the cash index right now is trying to climb higher. But so basically, look, at the moment, the idea that I had here is to see that if we fall below the 14,440 territory, then I could consider maybe a bit of a larger correction here to the downside. Now, I'm not excluding that option yet, to be honest, because well, we're only just by a few points right now above this hurdle, above that 14,440 territory. Look, we still have time before before Germany opens up. So we could still see maybe a decline, and for example, if we do stay below that hurdle, below this 14,440 territory, then yes, I will consider a move to the downside here, at least initially towards this upside line. And this upside line is taken from the low of the 13th of October. If that upside line gets broken, then yes, I'll go further south. The FTSE 100, guys. So I have picked up on this one recently. I mean, I'm liking the area where it is currently. I would say we're getting into a nice little squeeze here. Yesterday, look, we broke below this upside line, and then we traveled back inside this little kind of squeeze. And look how well it's getting here. I mean, sitting here. So basically, I am waiting for something again to happen here, like maybe a breakout to the upside. If for a breakout to the upside, what I would need here, and let me just grab a line, horizontal line here. For the upside, I need to see a push above this 7,498, or let's round it up to 7,500 zone. So that's kind of the nice, beautiful number there. If we push through it and stay above it, then yeah, I'll go higher. For the downside, I need to see a drop below this upside line, and then we will consider a move lower. So yeah, that's simple as that, guys. And another thing, if we stay below this upside line, I would like to see, actually, this is probably where my preference comes in, but again, will that happen? We'll have to go slowly on this, but my initial target will be this 23.6% retracement on the Fibonacci right there. So in terms of DXY, the dollar index, okay, this one's playing around here with that 200-day EMA. As you can see, yesterday we dropped below it, then it decided to come back above, so that's why I am just still monitoring this one, observing just the price action, because again, this here, I wouldn't say that's like, you know, that's a good indication for the downside, because I said before that for the downside I need to see the index staying below the 200-day EMA. For the upside, I need to see a push somewhere above that 108 territory right there, and then I'll go a little bit to the upside. Now, gold, this one's quite interesting. Look at the choppiness here. I mean, I talked about this, and I said that, hey, maybe, you know, we're having this little pause here, a little consolidation before another push higher, because although this is not something very clear here, I mean, I would try to draw maybe a let me just grab this one very quickly. Maybe I'll try to draw this a channel here, like a falling channel, which, okay, might be the case here. If you draw it, maybe let me just grab this basically, one moment, up, something like this. It's not ideal, but hey, let me just see. Okay, this is gonna be annoying a little bit. Yeah, that's wait, I know what I'm gonna do. Where's that magnet? There we go. Let's remove the magnet, and let me just do it manually. And I think could be an interesting one here. So yeah, look, maybe this is a falling channel. Certainly looks like one, but at the same time, this falling channel could be seen as a bullish flag together with this, because look, we have our kind of pole-ish, and we're now forming this little flag, so which is okay, which is fine. And if we do break above the upper side of this flag, then this could lead to some higher levels. However, as I've mentioned previously, of course, the ideal scenario is to wait from around here, from the peak of this flag, and then go higher, because a forthcoming higher high would be confirmed. But look, with careful risk management, I mean, you could, like, let's say, start maybe looking at some higher levels on a break of this area, the upper side of the flag, the channel here, this 200-day EMA as well, and then yeah, we could go to the upside. But at this point, I would say, look, let's go slowly on this one, let's be careful, and then yeah, we could do something about it, because as long as it remains within the channel here, there's still potential for the downside. But at this point, my downside scenario is from somewhere around this 1725 level. Silver is a similar story here. It's not really a flag here of some sort, but hey, it could just follow suit. As if gold starts popping, then silver could pop as well. Most of the time they go hand in hand, but you know, let's not rush into any conclusion. I would say for the upside, I still need to see a push above that 21.62 territory. Ethereum Classic, so ETC USD. Now this is one of my favorite, to be honest. I mean, it's quite nice, it's quite logical, and quite technical as well. So look, I mean, look at this beautiful hold up here. After we also broke that little short-term downside line, which I had on Ethereum as well, I think I still have it. You can see that we've pushed higher, and we are now forming, let me just get rid of it. Now we're kind of also forming something like a prolonged bullish flag formation here, which, look, according to all the TA rules, tends to break to the upside, of course. However, the cautiousness here is required, and we need to see some sort of a confirmation break. Probably, I would like to put maybe a level somewhere around here, maybe even let's get the magnet back up here, maybe somewhere like through this 21 territory in general. But you can already probably start looking at some higher levels if we push above the 21-day EMA right there. WTI oil, this one, look at this. I mean, this, talk about annoying. It gave us a clear indication that it wants to go lower, and there we go, boom. That's why you always have to wait for that, especially on oil. I mean, oil is if you understand how to trade it, great. If you don't be mad at yourself, although maybe you like it, you know, you would like to trade it, but let's say something is not working out for you, honestly, leave it, because this is what I do as well. I mean, I do like certain instruments. I do like, for example, Euro GBP, but I have no clue, or sorry, not that I have no clue, but in general, it comes difficult to me, so that's why I just kind of leave it. I observe it, I watch it, I maybe like make my decisions on trading other instruments based on Euro GBP, but with oil, a similar story. I personally don't look. I mean, I like to look at it. I would like to trade it, but this is probably not the instrument that is kind of can be tamed that easily. Like tame, it's like that dragon, you know, which you cannot really easily tame. However, if you've managed to tame that dragon, this oil dragon here, then congratulations, guys, wonderful. But like I said, if it's not going, don't worry. If you just kind of leave it, and you can find another instrument. However, from the technical perspective, look, it's perfect in general. You can see that it drifted lower. If it would have stayed below that 76.28 territory, I would have gone further south. Look, I mean, I was aiming lower, but I said that if we stay below this area, then I'll get more comfortable with the downside for further declines. Well, as you can see, we have jumped back up, and yeah, we are now kind of, it seems like we're targeting this downside line. However, my upside scenario from where I'll get a little bit more comfortable with the upside is going to be this 82.10. So far, I would say I was quite right on the, not to brag here or anything, but I was quite right on the oil. But I think this is one of those instruments that you analyze, but probably don't touch it yourself. If you can find value in what I'm saying here in terms of, let's say, oil, great, guys, wonderful. I'm happy for that, you know. But I think I need to, because I think that I have too many emotions attached to oil, and that's why maybe it's not, you know, getting tamed. It's not allowing itself to be tamed by me. But hey. We have to leave it as it is. Long story short, look, for the upside, I will get more comfortable with the upside on a push above this 82.10, because at the same time, not only we would break this downside line, we would also break above this 82.10, which is a good area of support and resistance previously. Could be seen as a good area of resistance again, and this 21-day EMA. Simple as that. Now, jumping into a few pairs, AUD CHF. Haven't looked at this one for quite a while, but let me get rid of all the drawings here and start fresh. Now, some of the levels that were just right there, I'll put back on the chart. First of all, I want to show you where we are in relation to these EMAs. So we're currently oscillating around that 21-day EMA. So that's why the 21-day EMA right now at this point is not really valid a lot. The only thing is that what we can do here, for example, is if we somehow push here higher, then my next target is the 100-day EMA and maybe this 200-day EMA as well. Now, the 100-day EMA could probably, by the time that we could travel towards the upside here, maybe it could come closer to the 0.6454 territory right here. Or maybe there's a slightly higher level right here. Also could be an interesting one, 0.6480. Now, this could be a nice area. But again, for this, I would say what I would need to happen here is maybe to see a push above this downside line. Now, another problem that I have with the upside is the fact that we could be forming a descending triangle with, look at this beautiful line here, the 0.6306, approximately around here, maybe even actually, maybe it's the 0.63 in general. Let me just see what's this one. Yeah, look, the 0.63 territory is providing fantastic support so far. At the same time, we could be forming this descending triangle, which according to all the TA rules tends to break to the downside. Yeah, we need to see a confirmation break first. Look, I mean, although it's forming a descending triangle, doesn't mean that we will actually definitely go, you know, lower. No, we need a confirmation break, and not only a false break, we need the body to stay below it, and then we could, you know, do something about it. At the moment, I'm just observing this one, but I just wanted to show you this one because this could end up being quite an interesting one. AUDJPY, also look at this. I mean, after we dropped, and look, I mean, I was targeting this 92.62 territory and this 200-day EMA. I would say mission accomplished, because although we didn't really, you know, hit that 200-day EMA that straight, but we came very close, and I think that's, you know, that's a good result, so I'm gonna stick to it. So long story short, I will at the moment, if I want to go lower, I need to see a drop below this 200-day EMA. Anything up until here, I will take as a neutral stance. This level I'll leave. This upside line I will remove, and I will redraw this downside line this way right here. And I think this could be quite accurate, because look how well this has been playing out. So if you're looking for some higher levels, then wait for a push above this downside line. Why? Because at the same time we would get a push above all of the EMAs, and maybe more buyers could join in here and drag this one all the way towards this 95.74 territory. AUD-NZD, very quickly on this one. I'm not going to spend too much time on AUD-NZD. I mean, I talked a lot about this already, so look, I mean, I'm still waiting for something to happen here, like a breakout here below the 1.0755. If we push through the downside line, then yep, I will get comfortable with higher levels. But for higher levels, I need to see a push above this 1.0883 territory right there. NZD JPY, something that I haven't looked for quite a while, but I wanted to run this by you because look at how well, if we look at it at the bigger picture, overall we're kind of still balancing above the 100-day and the 200-day EMAs. At the same time, we are kind of struggling with some of the barriers here, like for example this one, and slightly below that we do have this one. So the 87.35 and 87.88, these are the ones that I'm watching for now, and at the same time I'm also watching this this upside line, which actually, although it's a steep one, it still is working out beautifully. Look at the rebound we're getting here today from this upside line. So far, so good. So as long as we stay in this little territory right here, I'm neutral, but at the same time, it could be forming a nice ascending triangle here. Let's see how it's going to play out. Of course, if it breaks the upside line, then I'm going to go towards this target here, and this one right there. There we go. This one here, or 83.85, or actually even better, I think this could be an interesting target here. Yep, there we go. The 84 zone could be a nice target, so that's what I'm going to be aiming for if we break this upside line. USD JPY, this one, look, still waiting. Look, yesterday we had a tease here. We had a flirt with this 137.67. The same analysis is valid. I talked about this already, so I need to see a break of this area here in order to go lower. Simple as that. For the upside, I need to see a break of this downside line and a push over the 142.25 level right there. I'm not gonna, like I said, not gonna talk about this much because it's the same analysis over and over. USD CHF, look, this one I also mentioned yesterday, so I'm watching that 0.94 territory. I need to see a break below it in order to go lower. Again, simple as that. So far we're below all of the EMAs. And another thing, look, we're seeing that the 21-day crossing below the 200-day EMA. Okay, last time we had this happening somewhere around here back in January, mid-January, but it was actually kind of oscillating around the 200-day EMA. However, this time we're seeing a bit of a stronger move here below this and like a stronger cut. That's why maybe this could, carry a little bit more significance than this, for example, back in January or December, November 2021. But long story short, the 0.94 territory, that's what I need in order to go lower. GBP USD, look at this. This is like music to my eyes. Yeah, not ears, but eyes. Because, look, I mean, this is just amazing. I mean, I talked about this idea of a rising veg. Wait until I get to the GBP CAD, honestly. So far, so good. Again, I hope this is going to go lower because, look, as long as it stays below the 200-day EMA, I am aiming to the downside. I can consider maybe a steep up move here to the upside, maybe even a pop above the this 200-day EMA. But if at the end of the day it still travels back down and stays below it, well, this could be like a nice cue here for further declines towards the lower side of the rising veg, which, according to all the tier rules, tends to break to the downside. GBP CAD, look at this one. Beautiful push yesterday to the upside early in the morning during the European hours initially, and then by the end of the day it traveled back down, and look at this, it continues to fall. I think that this could work out as a beautiful rising veg, hopefully, of course, because anything can still happen, don't get me wrong. But at the moment, I'm leaning towards the downside. I do consider, let's say, occasional spikes to the upside, but overall, I think that overall in the short term, I'm considering maybe further declines here. Towards the lower side of the rising veg. EURUSD, something that I haven't looked at for quite a while, but hey, look, we have ourselves a bit of a squeeze here, and I am waiting for a clear exit. I need to see a clear break through one of these trend lines in order to go either higher or lower. So long story short, I'm not doing much here because first of all, we're just kind of oscillating around the 21-day and 100-day EMAs. And second, yeah, we're stuck in between these two trend lines, so that's why just waiting for a clear breakout, you know, in order to do something like similar like with AUD JPY, basically like when we waited for, you know, breakout from the triangle. Euro against the Mexican peso. Look how well this is playing out. Look, I mean, in general, I am more bullish than bearish on this one. However, I see that we have fallen. We initially got that breakout here, a nice, beautiful false breakout, and look at this. We drifted heavily to the downside towards that 21-day EMA, and this is where we stalled. I said to you before that I need to see a clear move. Ideally, I would like to see the daily candle staying, the body of the daily candle staying, either well outside of this little range. At the moment, we're closer to the lower side here of this, to the lower side of this little range, and we're near this 21-day EMA. So if it falls below the 19.89, well, maybe this could open the door towards some lower levels. And finally, EURUSD. Yeah, this one's, look at this. Look at this beautiful push yesterday to the upside. Test the 1.0482 and drift all the way back below the 200-day EMA. Today, this morning, we've pushed back up towards that 200-day EMA. We tested it, and look at this. We are now kind of struggling with this 200-day EMA. Look, if we do somehow somehow manage to push back above this 200-day EMA, great. I'll slowly consider a move higher. However, my preference is from 1.0482. But if it stays, if it struggles to get back above the 200-day EMA here, I mean, this could lead to some lower levels. And another thing, I think this level can go, no longer needed, and instead I'm actually going to mark yesterday's low, the 1.0330. A nice good drop below this could attract a few more sellers towards that and drag the pair towards that 21-day EMA. Because let's admit, maybe we could see a range here as well. Let me just mark this on our charts. So maybe this could be the case here as well. So yeah. Let me just grab this one. There we go. And there we go. So, long story short, let's wait and see. If we fall below the 1.0330, I'm leaning a little bit more towards the downside, but only up until this lower side of the range. For the upside, I need to see first of all, a pop back above the 200-day EMA, but not only that, to get more comfortable with the upside, 1.0482, that's what I'm going to be looking at. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I think I went a little bit over my time, so thank you for sticking around. But yeah, if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a beautiful trading day, guys. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.